Sea Limited stock is up a whopping 154% year to date in 2024. Of course, I'm happy about that. I've had the stock rated as a buy all year long, so if investors capitalized on that recommendation, you will have made significant sums of money on that investment. But is the stock still a buy after its increase in price? I'll answer that question in this video while I review the company's latest quarterly financial results, look at the company's new valuation to update my recommendation of Sea Limited stock and let you know if I still think it's an excellent stock to buy at the newer, higher valuations. I want to thank The Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. So Sea Limited reported its quarterly financial results on November 12, 2024, and the CEO said that they're seeing growth across all of their three businesses. Shopee is on track to deliver full-year guidance of mid-20% increases in gross merchandise value. Sea Money's loan book grew by over 70% year over year and maintained its net loss ratio. And for its gaming segment, they now expect Free Fire's full-year bookings to grow over 30% year over year. So excellent growth across all its three major categories, and it's no surprise that the stock price is up by as much as it is. In fact, year to date, it's up exactly 154.2% for a phenomenal increase for Sea Limited, outperforming many of its e-commerce peers across the world, including Amazon, Mercado Libre, and others. So maybe more impressively to the revenue growth numbers are that it's improving profitability as well. And the company did highlight that, saying that they're very proud that we also improved profitability while getting back to high growth. They're not just going after growth for the sake of growing, they're going after profitable growth, which is always more impressive to me. Total GAAP revenue for the company was up 31% year over year to $4.3 billion, while total net income increased to $153 million compared to a net loss of $144 million in the same quarter last year. Huge improvement there, big inflection point from net loss of $144 to net income of $153 million. The balance sheet improved as of September 30th, 2024. The cash and equivalents balance came in at $10 billion, or $9.9 billion to be precise, and represented a net increase of $929 million from the June 30th quarter. So just in over 3 months, they improved their cash balance by over $929 million. In the e-commerce segment specifically, gross orders totaled 2.8 billion, which was up by 24%, and gross merchandise value increased by 25% to 25 billion. In the financial services segment, revenue increased by 38% to 616 million, while the non-performing loans that are past due by more than 90 days as a percentage of their overall value improved, came in at 1.2%, which was an improvement from the previous quarter. And this has been impressive worldwide, is the loan charge-off ratios has been true for most of these digital financial services companies in that they're performing better than expected. Worldwide economies have performed better than expected in 2024. Probably all worldwide economies, ex-China, have performed better than expected, while the Chinese economy has performed worse than expected in 2024. And that's led to better performance on these loans worldwide, whether it's in Southeast Asia for Sea Limited, or whether it's in Latin America for Mercado Libre, New Holdings, and StoneCo, or whether it's in the United States for companies like SoFi, PayPal, and other financial services companies. Overall, those loan books have performed much better than expected as consumer balance sheets have held up better than expected. In the digital entertainment business, bookings increased by 24% to 557 million. Remember, bookings eventually turn into revenue in these digital entertainment businesses, and quarterly active users increased by 15.5% to 629 million. Quarterly paying users increased by 24% to 50 million. and the paying user ratio increased to 8% compared to 7.5% for the same quarter last year. This means the number of people that are actually putting money on the Free Fire game increased quarter over quarter. That's good news because they've got a long runway there. Out of the 628 million users, only 50 million are paying users. And so if this rate is increasing, they can improve this by a significant amount. As you can see, the difference is over 570 million between paying and just active users. The average booking per user increased to 89 cents, up from 82 cents in the same quarter last year. So not only are more users depositing money on the platform, but the existing users are increasing the amount they're depositing on the platform. Great news to be sure. For the 9 months that ended September 30th, 2024, Sea Limited's cash flow from operations improved to $2.256 billion, up from $1.8 billion in the same period the prior year. So company's top line performance improving between 20 and 30% depending on the segment you look at, and overall revenue growth of closer to 30% for the company. That's also improving profitability on the bottom line and cash flow from operations, which improved by over $450 million year over year. So across the board, solid performance here for Sea Limited. It's no surprise that the stock price is up as much as it is. So given the big increases in share price, the valuation has also increased. To start the year, Sea Limited stock was trading at a single-digit valuation in forward price to earnings less than 10. It's now trading at a forward price to earnings closer to 30 at a forward PE of 28. However, given its growth prospects and its long-term potential, and compared with its current valuation, I still think the stock is a buy. So I've had the stock rated as a buy all year. I last updated it on June 3rd, and I'll update this recommendation again today on November 15th and reiterate that I still like this stock as a long-term investment. The risk versus reward is worthwhile in my opinion, given its growth prospects and its current valuation. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.